will have the sales. Like same purchases will have the sales. Whatever the goods we have been sold, if you want to get the final sales value, you should be deduct the sales return. That means whatever the damaged stock or whatever the goods returned from the customer, it should be minus from the sales account. Then we'll get the final sales value, which is also called as the turnover of the company. And after that, we'll have the direct incomes like a sale of scrap, insurance claim, sale of old newspapers. Like these examples will be there. In the profit and loss account, we'll use the balancing method which we have been done in the lecture. What we have been done in the lecture? So first, we'll total on the both sides. The highest amount will be recorded on the both sides, and definitely one side will have the lesser value. That will be we'll call it as balance carried on. But coming to the profit and loss account, that will be different. Here we should not keep the balance brought down or balance carried on. Instead of this, we'll have the profit or loss. But coming to the trading account, we'll have the gross profit or gross loss. How we can find out that? If you have the more incomes, then definitely we'll get the gross profit. If you have the more expenses, definitely we'll have the gross. It's a basic example, and in the real time also we can easily understand. So whenever the expenses is more, what will be happen? We need to generate the loan. So that means we are getting in the losses. If you have the more income, there is no expenditure. Then what will be happen? We'll have the savings. That is the profit. Likewise, if you have the more incomes, the gross profit will become. If you have the more expenses, the gross loss will become on. It will be on income side. So this is the trading account. In this pro forma, we have been received the gross profit. So that's why it has been transferred to the profit and loss account by gross profit brought down. If it is a gross loss, it should be recorded on the expenses side. And in the profit and loss account, we'll have only two groups. One is the indirect expenses and second one is the indirect income. While selling the product, whatever the expenditure you have been occurred and whatever the incomes you are getting, everything will be recorded in the profit and loss account. Like we have the sum of the ledgers example, like salaries, traveling expenses, internet bills, electricity bills, telephone bills, bank charges, like this will all comes under the indirect expenses. And we'll have the some examples as indirect incomes like interest received, commission received, dividends received. All this will be comes under the indirect income. In the profit and loss account also, we are using the ledger balancing method. So we'll total on the both sides, on the expenses side, on the income side. Definitely we'll have the shortfall. If you have the shortfall on the expenses side, then you'll get the profits. If you have the shortfall on the income side, you'll get the loss. Whatever the value you are getting, whether it is a profit or it is a loss, it should be transferred to the capital account. Should be transferred to the capital account in balance sheet, where we'll get the asset and liability information. The profit and loss account statement, also known as income statement or statement of earnings, is a financial statement that summarizes the revenue, cost, and expenses incurred by a business during a specific period, usually a fiscal quarter or year. So the same which I have been explained before, the same in the definition part is there. So all the revenues means nothing but the sales, cost, nothing but the purchases, expenses, incomes, everything will be summarized and will give a clear reports. The primary purpose of the profit and loss account is to show whether a company had made a profit or incurred a loss over the given period. So this profit and loss account is not only preparing at the year end. We can prepare this profit and loss account as and when we require.